Good morning, everybody. Welcome to my trading game plan. My name is Gareth Soloway, Chief Market Strategist here. Now, in today's episode, we're going to look at all the key trading setups in the market, what the markets are doing, and where they're likely going to go. We'll cover stocks, the S&P, the 10-year yield, the dollar, gold, silver, Bitcoin, you name it. We're going to cover the charts on all. All right, first and foremost, markets are falling sharply this morning. Now, this is the second day out of 3 days now that we've seen the markets collapsing. This is on the back of more issues out of China. China restricting shipping for U.S. entities, basically closing off the ability for the U.S. to use shippers in the Chinese region. And that is, again, sending worries of an escalation in the trade war. So this is just one thing here that's bringing us up to date in terms of whether or not the S&P has topped. We're going to take a look here. Let's get into the charts, guys. So number one, S&P is down pretty sharply this morning. This is the S&P futures, right? So essentially what we have is some choppy action yesterday. We had a nice bounce back, but one of the things, and I'm going to show it in a minute, we never recaptured the key wedge pattern trend line. Even with yesterday's bounce, it was not recaptured. Overnight, markets moved up and then started to decline on the back of the Chinese headlines there. All right. Now, markets are up just a little bit off of their lows. We'll see where they go. Flipping to the S&P 500. This is the concerning aspect, right? So if you want to know that this market is safe, it needs to get back in its safety zone. Its safety zone is basically between these two lines. Now, yesterday was a great bounce. The buy the dippers came out in force, but we did not see a recapture of that underbelly trend line right here, which was right around 66.85. Today, the S&P is looking to open down about 65 points. That will put it down right in this vicinity here. So we're not going to be at the lows, but we're going to still be opening pretty darn close to the potential for confirmation of the breakdown. Now, remember, folks, I've talked about this before. I don't get whipsawed on these close belows where it's a breakdown potentially, or close aboves where potentially it's a breakout. I need my confirmation signal to trigger. And the reason for that is basically I've been whipsawed in my early career so many times by thinking something's a breakout or breakdown, and then it reverses on me. Many of us have had that same experience. And so the confirmation signal that I use is strict in terms of the odds become very high that it's a real breakdown or breakout. Now, going back to the charts, where would that happen? Any daily close below the low here from Friday would confirm a breakdown of this wedge, and essentially it would confirm a market top to me. Okay. Now, a top can be a relative term, right? Is it a top for a month? Is it a top for a year? Is it top for a decade? No one really knows. But ultimately, what we do have at that point is a level to trade against. What do I mean by that? Well, if we confirm below here, let's say we close down in this range, ultimately any close back above here would negate that, and then the markets could go up and continue to rally higher. Okay, so we really do have a good idea of where a confirmed breakdown occurs, but also where it gets negated. And this is one of the things that a lot of people run into as investors and traders. It's easy to say, oh, the market's breaking out, but how do you know if it fails? What happens when it fails? How do you know specifically based on probability, aka technical analysis, where it fails? Same thing for a breakdown. Breakdowns can happen and they can fail. Granted, it's a very small probability that they fail in the near term, but they certainly can fail. And that's the job of the charts to let us know. Okay, so we have the S&P 500 here doing a beautiful job of continuing to move lower. Watch this low here on the charts. Let's go to the NASDAQ. The NASDAQ, very similar. We closed below a major trend line that goes all the way back to April of 2025. So earlier this year, that was the liberation tariff sell-off that ensued. And ultimately, from that point, the NASDAQ has been bumping along this line until Friday's nasty drop. Now, we did bounce back beautifully here. So again, good bounce back on the charts. But notice we did not recapture this trend line. All right. Now, again, this is what we would call a yellow alert area. Anything between here and this line here is a yellow alert area. What is a yellow alert area? A yellow alert area is an area of caution. It's an area where you haven't confirmed the breakdown, but you also haven't reemerged back above the key level to get back to safety. Essentially, you're swimming in shark-infested waters, but you haven't been attacked yet, right? So it's like, oh, you better be careful here. You better play it safe. But at the same time, it's not a dire scenario. It's not a red alert yet on the charts. Okay, so what we're watching here is as we trade down on the NASDAQ this morning, and we're trading right here on the NASDAQ 100 at 595.45, do we come down and close below Friday's low? If we do that, it's a confirmed breakdown and a confirmed market top. If we don't, we're still in the yellow alert zone of caution, but an unconfirmed breakdown at this point, which still leaves the opportunity for the market to recapture easily or relatively easily its safety net. Another chart to look at, and this potentially is the biggest one along with NVIDIA. We know the semis, we know the AI trade is the leader here. We obviously had a nasty red candle on the semis on Friday, a big bounce yesterday. Semis are trading lower today. Again, just to show you, a trend line here that goes back to March of 2020, that has been the stopping point. And you can see it very clearly. So this low here, and you can see how it chopped along here, and then we broke below it in the bear market of 2022. We then came up, we hit it, and that was the beginning of a bigger sell-off. Here we've hit it again. Is this the beginning of a bigger sell-off? What am I watching? I'm watching this trend line right here. We have to close below it and confirm. If that happens, then you expect a big correction. Aside from that, it's still technically in okay uptrend zone. And again, notice how the S&P and the NASDAQ have broken their trend lines going back to the April lows. But the semis, which is the AI trade, this is the one that is the strongest. This is the strongest horse in the race. It is still holding up, and we have to respect that for the time being. If the semis break down, then the markets are really in trouble. And by the way, that's confirmed with the NVIDIA chart. NVIDIA, you can see this one did tag the trend line, but it didn't break, and it bounced back yesterday. Now today, is it going to break? If it breaks, we go on watch for the confirmation signal. Okay, so we'll monitor that very, very closely. All right, so let's see where else we go here on the charts. Let me just take a look here as we go in. Let's take a look at the dollar chart real quick. Bear with me here as I'm just doing a couple notes here on my side on a couple trading things. And the reason I say that, guys, again, the dollar continues to stay strong here. Okay, the dollar continues to stay very, very strong as it pushes up towards what I think is going to be a key level to watch. So watch the dollar. It's staying strong right now. We have to monitor and see where things go. But ultimately, I still think the dollar has upside into the 100.9 level on the charts. Let's go to the 10-year yield chart here, folks, as we continue through. What we can see here is that we have a clear signal of a drop here and a breakdown continuing on the 10-year yield. On Friday, we had the first daily close, or I should say weekly close, below this trend line here. So this is the beginning of a bigger drop. And I said this yesterday. I had an interview with David Lynn where I talked about the fear that is kind of beginning to merge into myself. And the fear here is that you now have the political leaders of the world, China and the US. They can't even handle a 2 to 3% drop in the stock market. And what that tells us is the global and US economy is so keyed in and so reliant on the stock market that inevitably we're setting ourselves up for a failure here. And what I mean, again, is that you basically have two classes of US citizens and global citizens. Those that have investments, which ignore, they're not really caring about inflation very much because their accounts just keep going up. The stock market is now, what, 50, 60 trillion in the US. It's basically way bigger than GDP, right? So GDP of the US. And you have a massive amount of consumer spending reliant on the stock market. If the stock market stops going up, even if it starts going sideways, the economy is going into recession. And then you have everyone else who doesn't have a ton of investments who's like, oh my goodness, I go to the store every time and I'm literally struggling to pay for groceries. And that's, again, just one of the key things that's very, very concerning to me. All right. So again, we'll see where things go on this front, but nonetheless, let's keep our eyes on the charts. I want to get back to the charts here. We did have some earnings this morning. The bank earnings reported. Goldman Sachs beat earnings. The stock is down. JP Morgan beat earnings. The stock is down. BlackRock beat earnings, and the stock is down. Now, if we look at the daily chart of Goldman Sachs, look at this. I mean, this chart has gone parabolic. And what this shows us is this is a warning sign for earnings season. When stocks are at extreme all-time highs, a company, even if they beat on earnings and beat on revenue and give solid guidance, their stocks are still going to most likely sell off. And so be careful going into this factor here, because ultimately, when we start seeing more tech companies report, if they're trading at all-time highs, they are going to have to report such incredible numbers that really it's almost impossible for them to do. And by the way, we're seeing more of this OpenAI stuff. I didn't cover this yesterday, but AVGO yesterday was up 10% on the day. They signed another deal with OpenAI. All right. So OpenAI, again, we've seen deals from AMD, from NVIDIA, and now Broadcom. I mean, there's been deals left and right. It's like, what's the next semiconductor to do a partnership with OpenAI? This round robin continues where all of these players are essentially financing. Now, AVGO, it's not as clear how they're financing it, but I guarantee there's something in there that is essentially saying that, hey, we'll give you this money if you buy our chips. It's just the way we're seeing it, and it makes me unbelievably nervous about the overall market. All right, let's go on to a few others. Johnson & Johnson reported earnings. That stock's flat to positive on the day. So again, no trades here. None of these stocks on earnings are having big enough moves for me to trade. But don't worry, tomorrow morning, we will have ASML reporting here. And ASML is a semiconductor stock. This is likely going to be tradable. We'll watch and see where things go here. All right. MP Materials is up again. This one had a huge move of 21% yesterday, breaking out of a little inverse head and shoulders. Do you guys see it right here? Look at this. Little inverse head and shoulders breakout. The only issue here is what's the target? Let's do a calculation here, guys. So again, we have our inverse head and shoulders, okay? The overall target on this, and this is a little skewed because it's not the perfect inverse, but we'll still do it anyways. Essentially, if we do our measured move, you're looking at the stock basically trading at pre-market. It was trading at 101. It's now pulled back to 99.65. But essentially, pre-market, it did hit its target here, upwards here. Here's that level, and you can see it even pierced it. If we extend it all the way over, it pierced that target. And so MP Materials, if it gets back above 102 to 103, I'm likely pulling the trigger on a day trade short. I'll be keeping an eye on that. All right, this is a big deal, guys. Gold. All right, we're going to look at Bitcoin. We're going to look at silver. Don't worry, we're going to cover all of these. Okay, gold closed back above the parallel today or yesterday. The question I have for you, is that a breakout? And all of you guys, if you're new, you get a pass. But all of you guys that watch me on a daily basis, it's not a breakout, just like it's not a breakdown when it closes below a major level. You got to see confirmation. And again, just to reiterate this, I've studied charts for now over 2 decades, and I've found that when you don't confirm a breakout or breakdown, the odds that it's actually a breakout or breakdown are like 60-40. They're slightly favoring that it is a breakout or a breakdown, but not to the level where I feel comfortable putting money on the line. Now, once you confirm, the odds jump to 75 to 80% that it's a real breakdown or a breakout. And at that point, it's like, okay, 75, 80% odds. Now I'm willing to put money behind that, right? And again, it's all about figuring out what your levels are, what's your probability that you need to take a trade. Maybe some people are okay with 60-40. I personally am not. That's too close to a 50-50 gamble for myself. So on this chart on gold, are we going to confirm? Now you can see gold was up sharply overnight. It almost hit the 4,200 level, but it has backed off. If it were to close here, this would not confirm a breakout. Now, obviously, it's going to move throughout the course of the day. There's also a risk that this could put in a topping tail today. Topping tails are bearish reversal signals. We would basically have to close in this lower vicinity here to create a topping tail. If that happens, that not only would not confirm, but that would be a bearish reversal signal. You want to see the last time gold put in a topping tail? Right here, guys. This was a topping tail here, big tail on top, and it closed in the lower 25%. And we saw gold essentially go into a long base of consolidation until it went to the low of the parallel channel. And then boom, to the upside it went. And so this is a big day on gold, guys. If you're a gold bug like me and you've been watching this, now again, I have my long-term gold holdings, but I do swing trade it short. But bottom line is, if you're watching this, this is a big deal today. Do we confirm? And if we don't confirm, do we put in a topping tail on the chart? Speaking of not confirming breakouts, did you guys see silver? Silver, guys, again, blasted up through this major trend line, which if we go to the weekly chart, you can see where it comes from. Your 1980 high to your 2011 high. And that was a major point. Okay. Oh my goodness. Look at this. Now it's early in the week, but this fits a topping tail on the weekly chart. All right. We'll look back at this later this week and see where it is. But today, notice not only are you back below the high from yesterday, which you'd have to close above to confirm the breakout, but now you're selling off, potentially getting back below this key trend line. So this is a big deal here, guys. This is something we have to watch on silver. Can silver close above? Can it fight back in the next couple days, or does it close back below? Does it put in a weekly topping tail, which would be very bearish for silver in the near term? And I want to be clear again, folks, when I do analysis, it is short-term analysis. It's not long-term. I'm not saying where gold or silver is going to be in 2, 3, 5 years from now. In fact, I'm very long-term gold because I just see what the government keeps doing. Print, lower interest rates when there's any problems. Print, run up debt, more debt. If I ever saw a sign that that was actually going to be under control, maybe I wouldn't be so bullish gold long-term. But in the short term, as a trader, I have to look for these reversals. These are where I can make a lot of money if I can pinpoint where the next 10% reversal is in gold or silver, because ultimately that'll happen probably in a few weeks. And then I flip back to a long, make 10% on the downside, flip it around, go right back long, do the same thing on Bitcoin overall. All right, let's quickly go through oil and nat gas, and then I want to get into Bitcoin. Here's your chart on US oil. Oil bounced yesterday. It didn't confirm a breakdown. Today, we'll watch to see, does it close below 2 days ago low, Friday's low? We'll watch and see how that gets to it or how that goes. Okay, so monitor that very closely. If it confirms, you're likely headed to $55.25 to 35 cents. That would be your next target on US oil. But right now, again, oil trading lower today on the back of the heightened tensions from China. All right, next up, Bitcoin. Okay, so we talked about Bitcoin. This is the level to hold. Nasty sell on Bitcoin, guys. I said 110,000. In fact, when we were talking about this top here, and once it broke 117, 118,000, I said 110 is your next level. We hit 110, we got a big bounce. Okay, now we're back into 110,000. I wouldn't call, we talked about maybe a head and shoulders here. This really isn't a good enough shoulder. So I want to be clear on that. In terms of a head and shoulders, I don't love that. You know, yes, you could kind of make it out, but really the nature of a head and shoulder pattern, it should be very human-like, meaning that it can be on a slight angle, but the shoulders should be approximately the same size, right? They don't have to be exactly in terms of candles, but this is way off. This is way off on that. So for me, at least, yes, it needs to hold, but I wouldn't classify this as a head and shoulder at this point on the Bitcoin chart. If this breaks and confirms, I hate to say it, but Bitcoin's probably going down to this level here. You can see this is your longer term uptrend. So listen, that's the positive for bulls. Even if it goes to 92, 93, at least you're still in your uptrend. But again, if this level breaks, yeah, there'll be stopping points along the way. Like there'll be a good support right in here around 100,000. But my guess is eventually we're seeing 92 to 93,000 on Bitcoin. So this is a big deal on Bitcoin, guys. Big deal if it holds this level or not. As long as it holds, it honestly could trade slowly back up to 126. But if this breaks, and it's concerning, by the way, the one thing that you have to note here, the stock market fell sharply on Friday. Bitcoin and crypto basically had a crash. The stock market bounced on Monday. Bitcoin and crypto bounced. The stock market's falling sharply today. Bitcoin and crypto is dropping sharply. And so reason I point that out is there'll be a lot of narratives that say, oh, Bitcoin and crypto not correlated to risk assets. It is still. It just is. It just is. Gold, on the other hand, is less correlated, but in pure out panics, gold will fall as well. We saw that during the COVID collapse. It was so much panic. People just were selling everything, even gold at that point. All right. All right, guys, a couple other things here. I do want to just get through a couple questions. I got a couple minutes here to do a few questions. So let's bring out those questions here. First question that I have is, I read something recently, liquidity drives the price and narrative comes later. How much is this the case? How much is it based on leverage, margins, and debt of the stock market? So I don't know if I'd call liquidity. So liquidity, the more liquidity in the market, as long as the narratives are bullish, then it will push money into the stock market. So liquidity is a necessity, right? You have to have money for the stock market to go up. You have to have money that is essentially able to go into the market. Then as long as the narratives stay positive, that money will be driven into the market. What I love to say is that price and charts dictate everything, even prior to the news. So a good example of this would be on Bitcoin, right? So I was able to tell you guys that a likely Bitcoin top was going to be formed here at 126. I gave that level out. I talked about it in this trading game plan over and over again for literally weeks going into that level. Said, all right, the big battle is going to be right here. This is where you can expect a pullback. Now, Bitcoin pulled back, and then all of a sudden we got the collapse here on Bitcoin. Now, did I know what news was coming? No, you never know the news, but it's amazing how charts will tell you, and then the news will just be the reason. Like, again, is it insider information? Is it just the charts? Is it human psychology? I'm not smart enough to know which one of those it is. But what I do know is the charts generally predict price movement, and then news will follow to complete that price movement. And I think it's just fascinating to think about where most of us are glued to media, right? Social media, following the hype, the FOMO, the FUD, right? All of those things, or the mainstream media and the narratives, right? What's the latest narrative driving price? A true technician shuts all that out or uses it as a contrarian indicator and looks at the chart. All right. And that to me is the purest form of truth that you will ever find. It's really remarkable, in fact, to see that. All right. Here's another question. Last one is on IonQ. Could you look at IonQ, IONQ? Sure. Let's take a look at that stock. That is a supercomputer stock. It has had a great run. You can see it's, again, basically trading at all-time highs. It is getting hit a little bit today. The only thing I have here is that notice that the moves are shorter up, right? And so the one thing here, if you have a big move up and then a pullback, and then a smaller move up and a pullback, and then you're getting a smaller move up and you're pulling back today. And so that's a signal that this is running out of energy. And also notice, I'm not using my trend tool, but there's a trend line connecting this high to this high and literally gave you your top yesterday. And so listen, if the stock market continues to go up, honestly, these stocks probably continue to go, like Rigetti, right? Rigetti's had an amazing move up. Today, it's basically flat on the morning. But overall, you got to be careful. I talked about it yesterday when I did trading the close. I'm not looking to buy IonQ. I'm not looking to buy Rigetti. I'm looking to short them. And again, the idea is that the crowd is going all in on these. In general, at some point, the technicals start to signal overdone, exhaustion, kind of capitulation or distribution, where big money, I look for volume spikes, right? The volume in the chart can tell you when volume gets crazy at these highs that it's people are going all in, but also institutions are unloading into these type of situations. And that's where I start to say, all right, let me nibble on the short side. Let me look for a pullback. And it doesn't mean I'm not going to go long the stock. Like, I want to be clear on this. I have no love for any stock, and I have no hate for any stock. There's literally no stock I love or hate. They are trading vehicles for me to make money for myself, my family, and people that follow me, right? And so there's, with no emotion, you make pure logic, which is chart-based decisions. And at some point, something's getting ridiculous to a level where the charts are telling you it's going to reverse. And at some point, it's going to be a buy. So I'll go long Rigetti, I'll go short Rigetti. I'll go long INQ, I'll go short INQ. It's all about the charts. And I think this is a good lesson for us all as investors is, we all have our pet projects, right? Like, people will either love Tesla or hate Tesla. People will love, I don't know, Meta or hate Meta, right? And ultimately, you don't want to love or hate anything. I always say you don't want to love or hate anything that can't love or hate you back, right? It's that it's just a vehicle, it's just a stock, it's just a crypto, and it's there to make money off of. And if we remember that, we make better decisions overall versus falling in love, where then we ride these collapses in stocks or crypto that can be 30, 40, 50, 60, 70, 80%. Better to just recognize when something's overdone and be done with it. All right, you guys go have a great rest of your day. Thanks so much for watching. Make sure to share this with friends and family, guys, if you think they could benefit. I'll give you all my information here, all my levels, everything. Just share it with friends and family. Thanks so much and have a great day.